So now we have a topic which is some sort of controversy topic because we don't really use market structure or supply and demand that much. But of course, it can help you, as technically everything can help you. It's like not bad if you want to implant it. Of course, it's not the only thing you should use by any means, but if you combine it obviously with what we show you later on, it definitely can help you at a degree. But of course, just bear in mind, we don't really use market structure or supply and demand, right? But of course, it can help you a little bit. The way we use it is, of course, only in a specific way. And one of them is the momentum mitigation. You see it here right on the screen. What is it? Like you just call it the MM, momentum mitigation. And that just means if you have, like, let's say, start from left to right, you're having a build up, like equal lows, building up liquidity, then having some sort of inducement into a valid demand area from the left. Obviously, you get that, right? Then, of course, you can trade away, not just based on the demand, of course not. No, you're basing it based on the cycles, what you learned so far on the inducement into speed, vector candles, and then if it taps into a valid supply demand area, in this case a supply demand area, right? Only then if you get some sort of break of structures. Again, break of structures is always, if you have something like this, it's always the push that led to the new low, and then if it gets broken like this, that is your break of structure, right? So that is break of structure. It's always the push that led to the low, right? Again, if you have something like this, obviously the push, technically this, if you prefer it like this, that is the push that made the new low. If it breaks it like this, that's your break of structure, that's your liquidity. If it taps back lower, that's your extreme mitigation. You can trade something like this, right? So in this scenario of how we're trading the momentum mitigation is when it taps obviously into a demand area, it technically has potential until the next liquidity zone or supply demand area. In this scenario, a supply, right? So if it taps in there, you have a valid cycle before that. Obviously, no worries, we will dig into the cycles in a later stage, but for now, just understand of how we use supply demand. You have potential until the next supply areas, right? So always playing the bounce between supply demands in this order, right? Obviously, on the other way order as well. So then now, why is this box in here purple until this stage and it becomes red? So if you tap into a demand area, it of course can be tradable. Let's say you have break of structure and this push comes lower, taps into the imbalance zone, into another mitigation, you can trade it up, right? Until at least the next supply and demand area. And then the whole thing continues or repeats itself. Then you have maybe equal highs to the upside, momentum, speed, taps into the supply area. Then you have break of structure to the low side. But then this overall play, as it tapped now into the supply area and never tapped before into the demand areas, this violates or invalidates the whole areas from this moment on. Okay, you can see it in this example a little bit better. So let's say, okay, we tapped into a demand area, having break of structure, perfect, after a nice cycle buildup into inducement, right, into mitigation. Then, of course, break of structure in here, comes back, fills the imbalance, taps into this demand right here. It has potential to go until the next supply area, right? So definitely this is a tradable thing, right? But the moment it taps the supply area, the next zones get invalidated. Now you can place it in a smaller picture play as well, tapped into the higher time frame POI, right? Point of interest into, always in this scenario, supply, giving you break of structures, never tapped into some sort of demand areas, perfect, comes back, mitigates, momentum mitigation. Why is it momentum mitigation? Right, you come into these some sort of supply areas, tap into, like maybe like this, right? And then here would be your next demand area. you're having a break of structure. Now again, this push led to the new highs in here into this demand areas or supply areas, right? I always switch the shit around. You will notice later on also, nobody gives a shit about the order anyways. It's supply demand, right? Then you're having break of structure, taps in before it even taps in here. So that is super, super valid, right? Because you're having break of structure before, tapping into higher time frame supply demand areas, gives you break of structure, comes back, mitigates the imbalance, right? And then obviously you have at least point or space until here. But obviously in this scenario, if this is a higher time frame POI, could be smart money trap. We dig into that later also. And then you can trade the order flow. And then obviously for new low lows, something like this, right? But the momentum mitigation comes into place when it taps in before the valid supply demand areas, before it tags into the another one, okay? So what does it mean again? If you look at this example, so let's say, again, using this one instead, okay, so you tap into demand areas. Awesome. This zone would be valid after the break of structure if it taps in. If it doesn't tap in, which it did not here, right, it becomes valid until it taps into now valid supply areas. Then the whole zone gets invalidated and should not be looked for, right, for continuation, as it will turn into these smart money reversal trap zones, right, where smart money traders wanted to trade the continuation, the order flow, whatever, but of course they will get invalidated because of it, right? So if you have scenarios like this though, let's take the third one. So you tap into demand areas, you have break of structure, perfect, taps back into, gives you a momentum mitigation into imbalances, like perfect, you can trade this until the next areas, awesome, right? So then technically this zone becomes the order flow zone. If you make new high highs, if it comes back in here, technically valid order flow, right? Because it never tapped into the next supply area. The moment it does, be careful, right? Now you get break of structure to the low side. Now taps into this supply area or demand areas before coming back into the supply. That's where you have to be a little bit careful, right? You see the difference? Here, it did not tap into the supply demand area before, or in this case, not taps into demand, but comes into supply first after break of structure, after tapping into supply areas higher time frame wise, right? You see, that is way nice, and that becomes our momentum mitigation, because the momentum is still on your side, because you never had the resistance or whatever, this kind of other traders tapping into your counter direction, right? And obviously this gives you at least space until the next areas, right? For always later purposes, this can be nice for entries. For now, you just have to understand the supply demand plays and what comes first, and trading in line with the overall direction. Okay, so how does this now work obviously on charts, and how can we use it in combination with the inducements of how you learned in the chapter before that? So if we use our magic box again for orientation of where the days are, right? So we see we're having 3 days, technically with this one type of 4, right? But now see what's going on in here. So we already can see we don't really have any medium inducements, right? Because again, medium inducement would be this one, never did it. Okay, then this one technically is a medium inducement. This one never induced it. And also this one only induced it later on this stage also, right? So this one becomes a mitigation, right? So this one is your demand areas, right? From here to here. Awesome, becomes your demand. Also, of course, we have to check the higher time frame if what's going on to the left in here. And of course, in here, if that also is valid for this, or if you should follow inducement in here. So let's actually look it up. This one is the 5 minute right here. So this is the 5 minute chart, right? Now we look at the 15 M15, and we can see, of course, huge down run, huge imbalances left, right? Comes all the way back into these supply areas, taps into right in here. Perfect. Okay, so that's definitely a very valid zone in here. Perfect. But what did they do before that? If you check this area below here, also, if you check just on the 5-minute, the day before that, this is the inducement area, which induced structure internally, right? This now gives you the break of structure, the break, obviously, right? This push led to, obviously, the inducement down here. This breaks it, comes all the way back, taps into this inducement POI now, right? So valid demand areas, and this point in here came even back one more time into this demand area. So, okay, perfect. So this can give us another point of interest until when? Next supply demand areas. In this case, supply, right? Awesome. But let's do this chronologically to see what actually was going on in here. So first, if we jump into, or price comes, taps into this point of interest, which was an inducement POI, gives us valid demand areas. Awesome. What does it do now? So if it taps into the valid demand areas, we have space to go until the next supply areas, right? So you can see this was this day before, tapped into it, right? This one induced the day before. So obviously perfectly fine. You see, this is the mitigation of here. Awesome. And this, of course, was the inducement of these areas, right? Perfect. So this one is valid until when? Grabs liquidity. You see the huge equal highs in here. Perfect. We want to grab liquidity into valid supply areas, right? And then, of course, we break it down to the smaller picture, which is now the M5. Taps into it. What do we have? Huge momentum to the upside first. Taps into this M15 POI after grabbing liquidity coming from an inducement low. Perfect. Grab liquidity high now. Taps into supply areas. And guess what we have after that? This is the push that led to the new high, right? This made a new high in here. That's also tapped into it. Then we have break of structure, right? Break of structure. This point gets broken. We have imbalances left. This point of interest in here becomes our momentum mitigation, and we are valid until when? At least the next demand areas, right? Perfect. Okay, so let's see. Before that even, like taps into, right? Obviously we had potential until the next area, but what happened before we tapped into here, right? You see, this is obviously the push that led to all this this lows, right? And this push got broke, like first of all, huge buildups, tapped it 4 times before it what? Gets broken, right? So that's your break of structure. After you get an inducement POI in here, right? This inducement obviously into another mitigation to the left. Perfect. Now break of structure to the high side, leaves imbalances, comes back, never tapped supply before. So this is your magic, your momentum mitigation, right? Perfect. You get sense, make sense? Because of course we never tapped into higher time frame POIs first. So we're trading the momentum into this next supply level. Okay. Then of course we tap the supply level. The whole thing begins from the beginning. We have a valid cycle, but obviously we dig into it very later what the cycles are. But we grabbed this liquidity, all the retailers getting stopped out of this equal highs, right? That then normal intentions were to fill the imbalances, come back to the supply areas, and then if you look at the lower time frames, this push, break of structure, never tapped demand first, right? The next demand areas would be in here, right? So never tapped anything in these areas, but breaks market structure, comes back, mitigates, and that's your potential short trade, right? Until when? Until the next demand areas, right? When it comes back, obviously comes back to the next demand areas. Obviously this one to probably together break even here, no problem. But just for now, understand, okay, this is your higher time from support, obviously definitely not support, but supply. right? And then of course you have space until here. Of course it comes even back one more time, not a problem, but never took out this high. So it just taps into the next demand areas. After it did that, right? Of course, what it's doing in here, break of structure, leaves, imbalances, right? Of course, comes back. That's your, again, your momentum mitigation, because guess what? It breaks market structure, never came back, obviously, to some sort of supply areas, right? Of course, you take the momentum into the next valid supply areas after a break of structure is done. Now, obviously, see the huge buildup they're trying to do, right? What's going on here? This, did it tap into any valid mitigation zones or supply demand areas, or in this case, obviously supply? No, it did not. It stayed short of it, right? So of course, this one is just the inducement of the build up to the downside, induce the channel, right? Of course, what is going on here? This is your inducement of the channel baby inducement, right? Leaves imbalances, taps into it, gives you the breakage structure, right? Again, this is the push that led to the new lower low. Break of structure in here, leaves imbalances, little build-up going on before that, taps into, is valid until when? Next supply areas where it taps into, perfect. Right after it taps the next supply areas, what's the next thing to do? Here's your push that led to the new highs, gets broken, right? And then obviously there's your next imbalance zone, comes back, taps it. That's always a little bit more tricky one, because of course you would better one be looking for the extreme, not a problem, but just showing you how it actually worked out in here. And then of course, absolutely smoked and taking out all these liquidity areas, taking it all out, right? Also to the left, everything is taken out. But before they do it, of course, they playing all the supply demand plays before, and then just smoke all the liquidity to the downside. Okay, so of course we have a few more examples. The next one will show you CAM, of course, our green wizard. So enjoy this one.
So let's jump into this one. So let's just look over a little bit of what we've learned so far. So let's identify our liquidity and our inducements. So we've obviously got an inducement here, liquidity and inducement here, possible break of structure here, because this is the push that caused this new low here. So at this point here, we would be interested in possibly this mitigation here. This is what we'd want. But let's continue to look at price action and let's see what happens. So next we have our push. We're getting into Asia. Asia does its thing. And then here we build equal highs right here. And then when we look to the left over here, what do we see? Well, we have a potential mitigation that we could look at. So if I just, you guys can see, I'll drag that like that and we'll just like that. So now we have our potential mitigation. So this tells us two things. Firstly, we've had a cycle here with build up, inducement and mitigation. But also, and this is one of the things, you don't want to use this on its own, but you want to combine it with everything else that we teach. Now we've potentially had our momentum mitigation where, or we're about to have it, right? Where, so what does that mean? Well, that means that this mitigation that we were looking for is probably not going to play anymore, because we've taken this triple top, we've had this mitigation, we've had cycle complete to the upside, and we've had our momentum mitigation. So this is likely going to become a smart money trap, and our target for these cells is likely going to be this low. So we no longer want to look for the mitigation here. And if I just show you the full markup, you'll see exactly like we said, right? So we had this liquidity gets taken. Perfect. This is the BOS, and this is the mitigation that we wanted to take. It missed. Okay, that's fine. No trade. Or maybe there was, but it would be more of an advanced one. But let's not look at that for now. Okay, then coming up into Asia, we build 1, 2, and I know this gets taken, but this is still a triple top. So 1, 2, 3, and then we induce it. Again, look at this speed, look at this speed right here, and look at how we come into this mitigation right here. So this is likely a completed cycle, and then this is the push that caused the new high. So once we break this, this is our break of structure. And although this is actually the third variation of the momentum mitigation, it's nice, but you need to have a good understanding of it. So this is where structure traders are going to buy from. They're going to buy from here. So we can actually use this to our advantage and sell back down into it. Mitigation that we were initially looking for away from this inducement has now become a smart money trap, because we've induced high, we've had a cycle high, and we've had a momentum mitigation high. So this is going to become our smart money trap. We see it gives a reaction, but ultimately gets taken out.